Right. Just let Virginia sit down. Okay, we're going to start. Okay, right. Good morning, everybody. Welcome to the Governance, Risk and Audit Committee meeting on Wednesday, the 30th of March 2022. There are a couple of changes that will happen throughout the day, morning, sorry, I don't mean day as all day, although it might be. I have checked with a few people. No one's got anything planned before 6 o'clock this evening, so we will hopefully receive how we go. Okay, let's make a start. Receive apologies.
Apologies from Councillor Pierre Buttercoper with Councillor Andrew Brown substituting.
Lovely, thank you. Do we have any public questions?
No, none received.
Thank you very much. Okay, items of urgent business. There are some which I will proceed to go ahead with, if you don't mind. First of all, on your agenda, item number 11 will follow item number 9. Item number 10 will then follow item 11. And items 12 and 13 are as published. I will now also read a statement which has come following advice from the monitoring officer, that all persons present are reminded that the EY audit result report being considered today contains exempt information relating to individuals or their identity. It is important that no question, response or statement is raised in this public session which would involve the likely disclosure of information which relates to individuals or is likely to reveal the identity of an individual. Any person doing so, having received this information, may be placing themselves in a difficult position. If there are any questions or statements which you are concerned about raising in the public part of this meeting, you may provide a written question to the Democratic Services Manager for the monitoring officer to review. All discussions which may relate to the specific individuals will need to be considered separately and after the consideration of the information at item 12 on the agenda. Thank you. Okay, next item, number 5, declarations of interest. Has anybody got any, as noted in our pack, pages 1 to 6? No, thank you very much for that. Item number 6, the minutes of the GRAC meeting that was held on the 8th of March will be approved along with these minutes at the June 2022 meeting. Item number 7, the final statement of accounts. Over to you, Mark. Or Duncan, whoever is. Duncan's doing it, right.
Thank you, Chair. Morning, members. So we have before us this morning the 2019-20 statement of accounts for your consideration. I'd like to start by just apologising for the lateness of these accounts. So you'll all be aware that we have been trying to catch up over recent months to try and get back to where we need to be in terms of signing off the accounts. And the team have been working incredibly hard to get us to that position in conjunction with the auditors. So that has been positive, and I'm pleased that we've been able to bring forward the accounts today for your consideration. So they are before you this morning. It includes the external auditors report as well, which we will have discussion on. Part of the considerations and deliberations today will be to approve the letter of representation. You've also got another copy of the annual governance statement. So the committee will have previously approved this, but it has been slightly amended following discussion with the auditors. So there is an updated version today that will need approval. We'll discuss the standard of the accounts and the process we've been through. Obviously, ultimately, we would like to approve the statement of accounts today, but Mark will also speak to you about that. One of the positive points to note is that there's been no unadjusted misstatements. So Those conversations with the auditors have been very positive, and there aren't any misstatements that we are arguing about or have any issues with. Those discussions have gone well, and any changes have been updated. Just before we move on, Mark will also talk to you about infrastructure assets in a bit, but I'll just take you through the accounts initially at a high level, and then we can take any questions at that point, if that's okay, Chair. So as I've mentioned, this is the statement of accounts for 1920. We do have, just in terms of updating the committee on the schedule for the next couple of audits, we've got the audit for 2020-2021 scheduled for July. So that's in the work programme. The auditors are resourced to help us try and deliver the audit for that year. And then 2021-22 is scheduled at the moment for February 23. By that point, we will have caught up. So we will then be back to where we need to be, which again is a positive position. So the statutory version concludes on the 31st of March 2020 for that financial year, and the comparison within the accounts is for the previous financial year. So the accounts are produced in line with the CIPFA-LASAC Code of Best Practice, as they are every year. In terms of the actual document before you, you'll note that it is quite a long document and seems to get longer each year, but that's because we are required to provide more and more information each year because of our governing bodies. So there is an ongoing debate and discussion about how we can make the accounts more understandable for people and more accessible, but that hasn't really reached any conclusion as yet. So it is quite a weighty document, but you have a number of key statements within that, and it's prescriptive. So we have very little ability as an authority to change the format or remove statements. So there's a narrative report at the start of the document, which is something that I provide each year, which gives a commentary in terms of our financial performance for the year. There is a statement of responsibilities that's signed by myself as your Section 151 officer and also by the chair. Then you've got your core financial statements, your notes to the accounts. You then have a section on the collection fund, which is where we do all the adjustments for council tax and business rates. Then we've got the auditor's report, and there is also a glossary within there that tries to make some of the key areas a bit more understandable for you. But just in terms of the narrative statement, that's really to try and provide an easily understandable financial position. It looks at economy and efficiency and effectiveness, and it looks at the council's use of resources over the year. It gives you a bit more context in terms of the corporate plan, and looks at the revenue and capital position, also looks at the reserves, and then business rates retention, and there's also a view in there on future risk as well. Just in terms of the core financial statements, you've got the comprehensive income and expenditure statement, which is on page 5 of the accounts. You've got a movement in reserve statement, which follows on page 6. Your balance sheet is then over 2 pages, which is pages 7 and 8. And then following that, you've got the cash flow statement, which is on page 9 of the actual accounts. And then at the end of the document on page 92, you have the collection fund. So the comprehensive income and expenditure statement looks at the accounting cost of providing services in the year, and that's prepared in accordance with generally accepted accounting practice. And it looks at the authority's taxation that it's raised to cover that expenditure, and that can potentially be different to the actual accounting cost. The movement in reserve statement then shows the reserves that are held by the council. There's 2 types of reserves. There's usable reserves that we have. So that will include things like the general and earmark reserves that we often look at budget time and as part of the budget monitoring. So those are those reserves that are available to cover contingencies or are set aside for specific projects. And then you have something called unusable reserves, which the council can't access to actually fund services. And there are a number of those. And one example is the revaluation reserve, which looks at paper gains and losses in terms of revaluation of assets. The balance sheet shows the assets and liabilities for the authority as at the 31st of March 2020. And the bottom half of the balance sheet shows how our net assets are matched by those usable and unusable reserves. The cash flow statement again shows changes in cash over the year, and it looks at cash equivalents as well. So that's things that can be quickly and easily changed into cash, like bonds. It also shows how the authority generates and uses cash, and it's split between operating activities, investing activities, and financing activities. Collection fund, as I briefly mentioned, looks at council tax and non-domestic rates. So there is a statement that shows the total income that's collected through those various means, and how it's distributed, so to the precepting organisations and government. So you'll all know that we're the collection authority, so we have an obligation to collect precepts for town and parish councils, but also the county council and the police, and that's the account we use to keep track of all of that, and ultimately it results in a surplus or deficit position each year that we then address as required. Just very briefly, in terms of pensions, that's note 24, and it's covered by an international accounting standard, number 19. So that dictates how we have to manage the pension position, but we are part of the county pension scheme. So actually we get an actuarial report every year on the pension position, and that is also reflected in our accounts. The total contributions made to the local government pension scheme for the year in question is 2.3 million. So that's part of the payments we've made for that provision this year. So that's a very high level summary of the current position. It's probably more useful, Chair, now if everyone's okay, if I take any questions on that initial bit before we talk about the audit report, if that's okay. Thank you.
Right, thank you very much for that summary. Okay, questions now for anything within that report. GRAC members first, if you have any questions, and then any other people that wish to contribute. Are there any questions there from the GRAC members? No, you're all happy with that? Anybody else? And yes, please, Andrew.
Yeah, thank you, Mr. Chairman. Good morning, everybody. Can I, excuse me, can I just raise a question about gender pay balance and whether we're comfortable in that respect within the authority, and therefore we don't need to make any contingency for it?
In my view, as 151 officer, I think we are comfortable with our position. We do have a robust job evaluation process in place that we have had in place for a number of years, which looks at the equality of jobs based on the job requirement as opposed to any gender issues. So there is nothing that I am aware of that would give us need or requirement to make any provision for that area. Having said that, that's where some of those reserves do come into play. So we've got some of those cash reserves, we've got a general reserve that we can use for all sorts of different things. So in terms of that reserve position, we do have funding available, but no, I don't think we have any issues at present.
Thank you, Chair. Morning, everyone. Just a question about the pension fund. I think you mentioned it was run through county, is that right? Yeah, so are we comfortable with where that fund is invested? And I'm just thinking at the minute about Russia and any potential links to Russian state-owned companies or investments there. Thank you.
Yes, so it is managed by the Norfolk County Pension Fund, and there have been queries of a similar nature ongoing, and I think they are taking the opportunity to review those investments to see what exposure there is. I've not seen a final report on that to say exactly what the issues are that are raised or how they are going to address it, but I know it's something that they are currently looking at, and if it's helpful for the committee, once I get an updated position, I can share that with you all, if that's okay.
I think that would be helpful, thank you, and also perhaps to maybe articulate what our position on that might be. Thank you.
Sorry, Nigel. Sure.
Thank you, Mr. Chairman. Good morning, everyone. My question really is one of background. As Mr. Ellis has said, a very complex set of accounts. quite detailed. I know that in the past, it's been the practice for the audit, now the GRAC committee, to have a training session on these before you consider them. I'm just wondering whether that has happened on this occasion or whether it hasn't, Mr. Chairman. Thank you.
Morning, Nigel. No, it hasn't happened on this occasion. I think some of the focus training we've had previously has happened immediately ahead of the committee, but we have had a number of staff shortages recently, so we haven't been able to provide that. But if it's helpful in terms of the sign off of those future accounts, so ordinarily we would have another year where we are waiting and providing and producing the accounts. But as I mentioned earlier, we've actually got another set of accounts that we're looking to audit in July. So I think if the committee would find it helpful, happy to put those training sessions back on. What we've tried to do periodically in the past, the same as we've done training around the budget and risk and things like that, is to do that every couple of years, particularly if we've had new members coming along. I accept that it hasn't happened this year for these accounts, but absolutely happy to put on a session if members of the committee would find that helpful.
Thank you. Just go before you speak. Yes, it is true. I have to say, though, that this is a very small committee, and 2/3 of this committee have been together now for at least 3 years. So I fully understand the purpose of training and the updating, but I think we feel comfortable that I think they're well established now that if they're not sure about something, they would certainly ask the question. But I do take your point and thank you for that.
Yes, thank you for that. I can only say that in the past, it has been very beneficial because you only see these once a year, and the level of complexity is such that I can only speak for myself, but I always found that those training sessions were very helpful in at least sharpening the focus into where perhaps questions need to be asked. So thank you for that.
Okay, Mark, have you any comment on these accounts? Is there any other question? Anybody raising any hands? No. Okay, thank you for that. We're asked to review and approve the accounts. So if I could have a proposer and a seconder, please. Not till after. Okay, fine. We'll leave it until then. Okay, sorry about that. We'll move on, yes? Okay. Item number 8, the letter of representation. I have something to read, which I would like the committee to consider, that with reference to agenda item 8, I am asked to sign this document on behalf of the members, but I'm aware of some issues that may need to be addressed when we go into the closed session. I therefore propose delaying signing until such time as discussions have taken place and members are happy for me to sign the said document. Can I have a proposer and a seconder if you agree with that? Proposer, Christopher, seconder, Saul. That will be, so item 8 will now go into the closed session. Thank you. Okay, item number 9. The annual governance statement update.
Thank you, Chair. Yes, as I mentioned earlier, there has been a slight update to the AGS that you saw previously, and that does reference the audit report that is before you this morning in terms of the 2 police investigations that have been referenced. So that's the update that's been provided here. There's no other changes. So really we are looking particularly at paragraphs 5.1 and 5.2 of your AGS. And in terms of the numbering, I'm just trying to see if I can see so the numbering on the agenda is page 141 and page 142. So in discussion with Mark, and we are in a slightly strange position at the moment, again, because of the delay to the audit of the accounts, that we are several years past this point in time. But having had those discussions with Mark and Ernst & Young, we thought it was useful to make sure that there was reference to these investigations within the annual government statement, as they have been referenced within the audit report. So that's the only change, Chair, that I'd just like to mention to you. Thank you.
Thank you. So as Mr. Ellis has said, the addition is in paragraph 5.1 and 5.2 relating to the two police investigations into activities of the council during the 1920 financial year. The annual governance statement, as signed by myself and Councillor Sarah Butikofer, then leader of the council, was in respect of this document that was prepared in early 2021. Thank you. So the addition is an insertion to reflect the discussions which Mr. Ellis and Mr. Hodgson have referred to.
Thank you for that. Does anybody else have any questions to raise in this section? No? Okay, so that was, now again, we're asked to review and approve. Are we holding this back? Okay, that's fine, isn't it? Okay, no, the slight changes. So now we're going to item number 11. That's right. Look, yeah, we're moving them up a scale here. Sorry, this is going to get. I think item number 11 is the work programme. Emma, are you able to, any contribution to that you know of? And normally I appreciate Matt does it, it's not here, but I think it looks like we've covered everything that we wanted to.
Yes, I'm not aware of any changes or movement in the work programme. The committee clerk hasn't advised me of anything that I need to update the committee on at the moment, so I think it's presented to you as is, and we're on the expected cycle for the committee.
Okay, thank you for that. Any questions on the work programme? No, right, thank you very much. Now we're on to item, now we'll get confused. We're now on item 10. No, item 11, but it's marked, that's right, the audit result report. Yes, so we're online here. Right, okay, that's good. And this one is being done, is this your one, Mark?
It is, yeah.
It is your one. Off we go.
Thank you, John, and morning, members. So I'm going to split my presentation into our report into two, as I think that will allow you to better understand our reporting. So I'm going to start with the audit of the financial statements, which you have seen this morning. So the first point to note is that we have a materiality level of 1.21 million for this audit, and we're reporting any audit differences above £56,000 to you today. As set out on page 5, we have completed all of our planned procedures for the engagement, although there is one late emerging national issue which I will brief you on in a moment. Through the completion of our planned audit procedures, we have identified 6 audit differences which are set out on page 6 and with more detail in section 4. As you can see, the biggest of those audit differences is for £1 million, so below our materiality level, and was in relation to the accounting for the Better Broadband scheme. And the expenditure should have been classified as a revenue expenditure funded as capital under statute or REFCUS rather than as an intangible asset. That and all the other 5 audit differences that we have highlighted have been adjusted for within the revised financial statements before you this morning. There are no other unadjusted audit differences. Moving on to our areas of audit focuses and assurances gained on page 7 of our report. As you can see, we've gained all the assurances that we require from our procedures and have the necessary assurances for our audit opinion. Those assurances come from the audit risks section, which is part 2 or section 2 of the report, where there are more details. Taking these together, I think the report provides you as a committee with assurances that there were a low level of audit differences and none of them were individually material. There are no unadjusted differences within that set of financial statement, and we have gained all the assurances that we need against our audit risk areas. So that would lead me ordinarily to conclude that we could issue an unqualified opinion on the financial statements before you. So it is a good audit outcome and has been a good audit with few issues to report. However, there is an emerging issue nationally which has come out in the last 2 to 3 weeks in relation to infrastructure assets. So it's note 30 on pages 68 and 69 of the financial statements, which Duncan has talked you through this morning. As you can see, the carrying value at the 31st of March 2020 for infrastructure assets is £5.3 million, i.e. above our materiality level of £1.2 million. This issue is for, or the issue is that for this type of asset, and infrastructure assets are usually roads, is how we kind of think about it generally, but here it's coastal defences. Any addition to the balance sheet should either be a new asset, i.e. a new road, new part of coastal defence, or should be a replacement part for an existing asset, but that original part should be de-recognised and taken out of the balance sheet. And what we have found across the country in some audits is that the de-recognition element has not happened because infrastructure assets are clearly by their nature very long term, and the records for some of them when they were actually built don't exist anymore. So it's been incredibly difficult to say what was the value of this piece of road when we built it in 1950, and therefore can we take it out now with putting another piece of road over the top of it. So it's more about, are there sufficient records to be able to de-recognise the correct value and therefore make sure the carrying value at the 31st of March is correct. And what the issue is that a lot of those carrying values are over inflated because you've got the original value, you've got an addition on top with nothing taken out. So they are materially misstated. So at the moment, we are going through a process with Duncan to identify what assets your infrastructure records relate to. Can you identify when they were originally put in? Have they exceeded their useful life, which is 20 years? And are any additions a new asset or a replacement for an existing original asset? And we think we're getting to the answer, but clearly it takes time. And I think Duncan will confirm some of those assets go back before current accounting records at the council or detailed current accounting records are in existence. SIPFA, as the professional body in England for accounting, is considering the issue and has a consultation out currently, which may lead to a change in the way the audit code and the way accounting treatment goes, but that process is likely to take at least 2 months, but may change what happens going forward. So we're kind of in a hiatus period where we either need to prove de facto that the council's records are in line with the current code requirements and have all sufficient evidence to support when the asset came into being, its life, and any new additions are either new assets or replaced a piece of asset that was then de-recognised correctly, or we wait for the SIPFA consultation to say what the new approach is going to be. So at this point in time, I can't sign an audit opinion today, as I was hoping to do and as we were planning to do. But I think as a committee, you can take assurances that the audit that we planned has been complete and we were ready to sign. But this national issue in a box, which needs resolving, is parked on this desk, which needs to be resolved before I can sign the piece of paper. So whilst we were hoping to take all the paperwork away today, we can't, which means I think the recommendation for the approval of the accounts needs to be considered and may need to be subject to delegation to the chair once this box item has been resolved and we are comfortable with the position. I can happily take questions on that in a moment. In terms of the annual governance statement, linked to it, as Duncan has highlighted, we did request some amendments to reflect other findings in our audit report. So in terms of the financial statements, good process, good outcome, but we have this item we still need to resolve. So I think I will pause there and see if there's any questions on the financial statement element of our audit before moving on to my second part.
Thank you, Mark, for that. Question, Saul, please.
Thank you. I used to teach actually, and I can now understand when the students used to say to me, "It's doing my head in, sir," because that was doing my head in. So just if I could ask a question, Mark, about the assets and the original value of the asset, which is obviously quite hard to find. What's the case then if that asset has been improved over time since its original placement, if it's a coastal defence, up to now, say 10 years ago? Is that factored into it at all, or are you just looking at the original value of the asset despite what may have happened to it in between from then to now?
Good question. So let's just take a piece of coastal defence. I don't mind where it is. Let's say it's a mile long and you built it in 2000 and it cost you £1 million. Either two things can happen to that piece of coastal defence. It can require repairs and maintenance over its life, but that's a revenue cost. Or it's become so, the sea, for example, has eroded it so quickly that it needs to be replaced before its 20-year theoretical life came to an end. In which case the original cost of £1 million should be taken out, and the new cost of what work went on to replace it added in. So in 2005, you might have spent £2 million. So your new value for that would be 2 million, not 3 million. That, I think, is the best way I can explain it.
So if it's not replaced but repaired, that's a revenue cost. So that's not relevant. Okay. So how do we judge, where do you cross the line between repair and replace? I mean, you're talking about literally taking out a whole piece of, because coastal defences by their nature don't tend to sort of be taken out and then fully replaced. They tend to be repaired and, you know, upgraded, but I might be getting into too much.
Well, you're now teaching me about things when I might have some more questions for Duncan. But in essence, a repair is to ensure the asset can last its 20-year life, as opposed to it hasn't got a hope in hell of getting to 20 years, therefore we need to replace it.
Okay, I won't get us bogged down into the ins and outs of coastal defences. We'll have to ask Councillor Fitch-Tillett on that one. But my second question was, when might we have do we have a date for when it could be resolved from CIPRA, maybe?
So there are two streams going on. So the CIPRA stream, the consultation and any deliberations they need to go through, because if they decide they want to change their code, they have to go to the Financial Reporting Board of the UK to get it approved. That is going to take a minimum of 2 months, and I'm thinking it's going to be nearer 3 than 2. So that's the kind of the formal route if something is to change. The process that we're hoping to go through is to gain sufficient appropriate evidence that there are records that say this asset came into being here. Any new addition or capital spend since then is either on a new asset or on a new asset. I think that's where we would like to get to. And I think hopefully, bearing in mind where Easter falls and holidays, etc., for my team, and I'm imagining Duncan's, just the other side of Easter would be our ideal scenario for ensuring it is code compliant. If it's not code compliant, then I think we default to waiting for CIPRA, because otherwise we'd have to potentially qualify our accounts on a limitation of scope. We don't have enough information to know that infrastructure assets are materially stated.
So it could be our June meeting then. But,
so I think that's for the chair and as a committee to decide. So the two options are to defer approval to a subsequent meeting, or to give the chair delegated responsibility to approve the accounts once I'm happy and I can report in what our findings are on this very specific item. So that's a procedural issue for you as a council to confirm.
Can I just ask, going back to your analogy of the, it cost us £1 million originally, and we've had to build a new one for 2 million. What about the insurance cost that we would have maybe claimed on the damage to the £1 million one? Is that then taken off the £2 million? Because the insurance company may say, okay, you had it insured, you've had to replace it, so here's £1 million back. But we're going to spend £2 million on the new one, so do we only pay £1 million?
I think I'll defer to Duncan while I think about the answer.
Thank you, Mark. No, ordinarily anything, if we have a storm surge incident, for example, any insurance claim we can get back will support the cost of that asset. But if we were, say we lost Chroma Pier, for example, in a storm, if that cost us £30 million to replace, then we would recognise that full cost of 30 million on our balance sheet. It doesn't matter how that asset is financed. So whether half of that's from insurance, half of it's from reserves, half of it's from capital, however it's financed, we would recognise the full value of the asset, and then you start to depreciate that over its life.
And I think one of the issues that needs clarification is this original investment date and whether it's the 20 years, because most of our coast defences are older than 20 years and so wouldn't fall within the definition that Mark has outlined to you. We have had some investment in the Chroma coast defences in the past 20 years, but not any other in terms of capital investment. So there's been revenue funding to repair existing assets. And we do have a grant promised, pledged from the Environment Agency, both at Chroma to do further works and to strengthen and improve the promenade and coast defences in front of Munsley at the present time. And so it's those issues that I think we need that clarification on. I don't believe that it is coast defences in totality.
That's correct.
Yeah, so I think that's the main point, is that if something else comes up, we don't want to have to reopen it, and we can then, at the end of the closed session, come back live and then sign it off. Is that, you're okay with that? Okay, you carry on.
So part 2 is on value for money. And the story here, I think, is slightly different. So as set out on page 27 of our report, we did identify a significant risk to our value for money conclusion within our audit plan, which we brought to a previous meeting of this GRAC committee. Having completed our audit procedures in relation to the identified value for money risks, as well as other standard audit procedures, we are concluding that the council's arrangements were not adequate in 2019-20 financial year, the findings of which you can see in the detail of that report. So I'm not going to go through all of those. And those weaknesses are in a sound system of internal control emanating from the procurement of a capability review, internal audit review of project management, leading to some findings, and a lack of performance reporting in the year, remembering that this was pre-COVID as well. So this means that we will be qualifying our value for money conclusion on an except for basis. So that means the arrangements the council had in 2019-20 are adequate with the exception of X, Y, Z. And X, Y, Z we have set out in our audit report in section 3 in draft for you to see. Just for context, we have 3 options in reporting under value for money in 2019-20. We can issue an unqualified value for money conclusion, i.e. all arrangements are adequate. We can qualify on an except for basis, like I have just set out, or we can qualify on an adverse basis where we think there are significant weaknesses across many areas and therefore all the arrangements are deemed to be inadequate. Clearly, we have chosen the middle of those 3 options. So this is not the worst outcome that we could have reported, though I would say some of the issues are significant in nature. And as I have previously said, the modified opinion wording is set out in section 3 on pages 18 and 19 of our report. We did consider whether we needed to exercise our statutory audit powers given the outcome that we're reporting, but on balance, given it's an except for rather than an adverse VFM qualification, and the issue is reported in the public domain, and the issues have already been in the public domain previously, we deemed we did not need to exercise them. We have, though, made a series of recommendations to the council to address the identified weaknesses. And I know that the council has a planned response to these recommendations, and action has already been taken in many of the areas identified. The rest of our report provides the other key information about our audit, but those are the key messages that I would wish to get across to you in this session. And having finished my section 2, happy to take any questions related to that I am able to.
Thank you. Any members have any questions, points of clarification? No, they all seem to understand exactly what we're getting to. So I think that brings us back to the question that we will not be receive and noting it until we have gone into the private session in case there are any amendments that we wish to then discuss and to add to that. You're okay with that? I think that way it's a safer option for everyone. So that is item 11. The recommendation we need to make regarding the signing off, again, I think we can debate that later on and it can be added in if necessary. Is that what you're planning? Okay, lovely. Thank you very much indeed. Okay, we're now into, are there any other questions for anybody else? Because we will now be going into the process of closed session. So if anybody needs to say anything now, it's the best time to do it. Thank you. Okay. Let me find my papers. We're now on item number 12. Declaration. Yeah, I've got to see it. See, right? Okay. Thank you. Okay, so we're now going to go into private session as detailed in item 12 of the agenda under section 100A, paragraph 4 of the Local Government Act 1972, that the press and public be excluded from the meeting for the following items of business: discussion of a supplementary page in the EY audit result report, on the grounds that they may involve the likely disclosure of exempt information as defined in paragraphs 1 and 2 and part 1, schedule 12A of the Act. Can I have a proposer and a seconder, please? Andrew Brown proposed, seconder Peter Fisher. Thank you very much. So no opposition to it.
So it's a vote just to check that everything.
You're right, sorry. Can we have a show of hands, please, just to vote on that from the GRAC members?